This is all about distributions, probability, statistics, stability, and position sizing. I have a really cool app here effectively that allows us to see what happens as these probabilities and subsequent wins and losses for these trades change over time. So what happens if we have a 55% win rate and our win size is 2%, our loss size is 1.5? Well, we're going to be able to accumulate that edge over a series of trades. But what happens as my win rate drops? If you notice in the bar chart here, as I decrease this win rate, our edge is going down and down and down and down until it becomes zero. Then effectively, we're just operating at random. We're just going to indefinitely oscillate around zero. There's no growth there. And to make matters worse, if our loss size increases, we're going to actually have a negative edge and we're just going to lose money the more we trade this strategy. That's exactly what happened in this example. When we backtest the indicator, it looks good. Then when we try to use it, it does not work because there's no structure there. You're not trading anything. You're not trading anything substantive. There's literally nothing in terms of market structure that you're trying to take advantage of. You're not trying to ride some sort of driver of return like just pure market beta or commodities trend following or some sort of like crisis alpha overlay. You're not doing anything here. This is probably just some technical indicator that was overfit to historical data that's being sold to you for an exorbitant fee, right? Really, any fee is exorbitant for that. Effectively, the bigger problem here, right, and the big idea to understand in all of this is that probability, statistics, and distributions, they don't converge. All right, what I mean by that is suppose that they did and we observed this behavior, then out of sample going forward, this distribution on the right would perfectly match this distribution on the left. But that's not the case. So for example, here on the left, I'm going to show you convergence of a coin flip. And on the right, I'm going to show you what happens in the live market. So on the left here, we see, okay, well, if we keep flipping a coin, right, when we get enough data, at some point we reach a critical mass of data, we're really approaching that theoretical 50% mean for a coin flip. It's 50-50, right? The probability of the coin flip never changes, right? There's no regime that's going to magically change the probability of flipping a heads, right? But on the right here, we can see the market changes regimes all of the time. We can never actually observe the true distribution. If we did, we wouldn't need a model in the first place. So what you're seeing here is this running win rate, this probability, right? It's just oscillating indefinitely. We can see this pink line is the true probability. The orange line is never going to converge to it or anything. It's always going to change over time. We can try to proxy for these different regimes, but there's still not going to be convergence. Our models are going to break. They're always going to be wrong. Now, interestingly, and if you understand enough probability and statistics, our models do not need to be correct to make money. They just need to be sufficiently not wrong. Something I talk a lot about in the context of market making. I'll leave a link to that video in the description below if you're interested. The reality is everything is about positioning and survival, not exclusively profits. So we really don't care about just raw trading P&L. We care about what risk we're exposed to over time because nobody knows what's going to happen. We don't know if a bear cycle is going to hit tomorrow. Not me, not you, not Citadel, not Jane Street, not the president of the United States. If you're targeting a role as a trader, market maker, quant, or you're just looking to grow and protect your portfolio in all market climates by applying quantitative strategy, QuantGuild has 2 crazy free resources available to you. When you get started, you can pick your track. You can always change this later. If you're looking to break in, head on over to the Quant Roadmap. Every topic in the right order that you need to know for success in different roles. You can select them here. It will tell you the exact breadth and depth of knowledge you need in each for success in interviews and the career as a whole. And of course, if you're looking to grow and preserve your wealth, you're going to want to run your own personal hedge fund. This isn't a day trading strategy. It's structure institutions use every single day to cut their downside risk in half, improving their overall long run return. I have a free quant research note available to you on this page for exactly what is going on. Link in the description below to QuantGuild if you're interested in these free resources.